All right, let's dive right into the 2026 rental market because, the old rules, they're pretty much out the window. Today, we're going to break down how you can build real, reliable income and cash flow by taking a much smarter, more strategic approach to your investments.
So let's just get the biggest question out of the way first, the one that's probably on your mind. With all the chaos and the shifts in the market, is jumping into real estate right now still a winning move? Well, the material we're digging into today says yes, absolutely. But, and this is a big but, it comes with a major catch.
And here it is. This quote right here is probably the single most important mindset shift you need to make to succeed. The days of just buying a property, crossing your fingers, and hoping it skyrockets in value, well, they're over. Now it's all about precision, strategy, and operations, just like running any other successful business.
So to get you there, we're going to walk through 6 key stages. We'll start with how the market has shifted. Then we'll literally build out your personal investment blueprint. After that, we'll get into choosing properties and financing, then the real art of finding and vetting deals, how to operate like a total pro, and finally, how to scale it all for the future.
Okay, let's kick things off with our first section, the 2026 market shift. The big idea here is that we've seen this fundamental move away from what was basically gambling, pure speculation, and toward a much more deliberate, repeatable strategy.
So what does that actually mean for you? It means the game isn't just about appreciation anymore. The investors who are really winning today, they are laser-focused on creating steady, consistent monthly cash flow, running their properties super efficiently, and building their wealth patiently for the long haul.
And that focus on strategy leads us perfectly into our second section, your investment blueprint. This is all about knowing your destination before you even start the car. You have to define your personal goals before you even think about looking at properties.
And you have to get specific here. Vague goals like, I want to be rich, just won't cut it. What is your target for monthly passive income? Exactly how many properties do you want to own? By, say, 2030. What's that total net worth number you're aiming for? When you know these numbers, every decision you make after this becomes so much easier.
Once you have your own goals locked down, you can start analyzing markets the right way. And the research is really clear on this. You have to ignore the flashy headlines. Instead, you look at the fundamentals. Is the population in that area actually growing? Are good, stable jobs being created? Are the local laws friendly to landlords, or are they a nightmare? Is the city investing in itself, in its infrastructure? These are the real signs of the healthy rental market. Okay, that brings us to part 3, choosing the right assets and the right kind of leverage. This is where we get into the real nuts and bolts, what you're actually going to buy and how you're going to pay for it. Now, this is so crucial. There is no such thing as a universally best type of investment property. It just doesn't exist. A single-family home could be absolutely perfect for one investor's goals, while a fourplex is the right move for someone else. It always comes back to that blueprint you created for yourself.
And this slide, this is fantastic because it breaks down the trade-offs so clearly. You look at single-family homes, they're generally easier to finance and sell. But then you have multifamily, which can give you way more income potential. Condos are great for lower maintenance, but you've got to deal with those HOA fees. And short-term rentals, yeah, they can bring in some serious cash, but they also come with a lot more work and regulatory headaches. The choice has to match your risk tolerance and honestly, how much work you actually want to do.
And financing. Remember, it's not just about getting a loan. It's a strategic tool. You've got your standard conventional loans, of course, but there are also DSCR loans, which are really cool because they qualify you based on the property's income potential, not your personal W-2. And then you have options like refinancing to pull out equity or even partnering up. A tiny difference in your financing choice can make a huge impact on your returns down the line.
All right, let's move on to part 4, finding and vetting deals. This is the fun part, the active phase where you start building a system to find those great opportunities that nobody else is seeing.
And the key word here is system. You're not just searching once, you're building a deal pipeline. That means setting up automated alerts on all the listing sites, but also building real relationships with local agents and wholesalers. The people who see deals before they hit the market. And definitely start using modern AI tools to get quick, data-backed estimates on rent and rehab costs.
Okay, so you find a potential deal. Now the real work begins. This due diligence checklist, it is completely non-negotiable. I'm talking about getting inspectors in there to look at the big stuff, the roof, the plumbing, the electrical. You have to verify the legal title is clean, and maybe most important of all, you need to see the actual historical expenses and rent rolls, not the seller's fantasy numbers. This one step is where you avoid those absolute nightmare investments.
So you found the deal, you vetted it, you bought it. Now what? Well, that brings us to Section 5, operating like a pro. Because buying the property is just the start. Now you have to actually run it like a business to get that passive income you're after.
And you really face a fundamental choice here. Are you going to self-manage or are you going to hire a property manager? If you manage it yourself, you have all the control, but you also do all the work. If you hire it out, you get your time back, but it's going to cost you a management fee. There's really no right or wrong answer. It's just about what fits your life and how big you want your portfolio to get.
And no matter which path you choose, this is how you make it work. Technology is your absolute best friend. Using modern software to automate rent collection, track maintenance, and handle communication just smooths out the whole operation. It lets you grow without completely drowning in work. This is how you make your income truly passive. And that brings us to our final section, number 6, scaling and the future. This is about taking that first success and turning it into a real sustainable portfolio, all while keeping one eye on what's coming next.
And believe me, the future is already here. The source material points to 3 huge trends you just can't ignore. AI is making rent forecasting incredibly accurate, more and more of the day-to-day property management is becoming automated, and green buildings, well, they're not just good for the planet, they actually attract better tenants and lower your operating costs. If you embrace these trends, you're going to have a serious leg up on the competition. So, if we bring this all together, what's the big takeaway? It's simple, but it is so powerful. The people who win in this new market aren't gamblers. They are business owners who just happen to be in the real estate business. They plan in years, not months, and they operate with discipline.
So, where do you start with all this? How does this theory actually hit the real world? Well, the source material gives us a fantastic example to get you thinking. Step 1, find an expanding market with those strong fundamentals we talked about. And then, Step 2, look for a specific niche inside that market. For instance, the growing demand for furnished apartments. It's the perfect way to see how a big picture strategy connects to a very specific, very actionable investment you can make.